I'd say you can find AI in the spreadsheets. I think to some extent you have to, valuation's important, but my whole view is like if you focus just on valuation, you've missed every transformational growth stock the last 20 years. There's one chip in the world fueling the AI revolution. It's led by the godfather of AI. He's wearing a black leather jacket. His name's Jensen.
He's badass.
But it goes back to like, first of all, Jensen, 2021, 2022, getting crushed. Why are you investing in AI? You're a gaming company. You bet on the innovators. You bet on the CEOs. And I think that's also very important, like in terms of how we pick stocks. Retail has a huge seat at the table. I think what that's done is that, like in April, they held stocks, institutional sold it. You look at names like Tesla, Robinhood, I think at times Nvidia, Palantir. Retail's been head of institutional. The reality is like the biggest asset for Tesla is Musk. Tesla is Musk, Musk is Tesla. But this is the most important chapter, I think, ever in Tesla's growth story, the autonomous and robotics future. And I think you're seeing a wartime CEO again. And that's why I think in the future, Tesla will be defined by what Musk does over the next 12 to 18 months.
Welcome to the Master Investor Podcast with me, Wilfred Frost, where we celebrate and learn from the success of the greatest investors, business leaders, and politicians in the world, giving you, our listeners, the edge. The Master Investor Podcast is sponsored by Interactive Brokers. Please do remember the views expressed in this podcast are for general informational purposes only. Nothing in the podcast constitutes a financial promotion, investment advice, or a personal recommendation. More on that in the show notes. My guest today, Dan Ives, is Managing Director and Senior Equity Research Analyst at Wedbush Securities. He's led the firm's tech coverage since 2018. Since then, he has been unrelentingly bullish, correctly, in particular on the AI theme, even more correctly. And he's done it by being unapologetically himself, not just bold calls, but bold clothes, albeit offset by his very gracious way. And in doing so, I would argue, has elevated a relatively small firm in Wedbush in the process. He's also the founder of Ives ETF and the chairman of Orbs, both of which we will get to as well. Dan, my friend, welcome to the Master Investor Podcast.
Great to be here. So excited to be with you.
So excited. We've both been itching to start in the last 10 minutes as we've been framing up the cameras. You are dressed appropriately as ever. And I hadn't realized until prepping for this, you have your own clothing line now as well, which we're going to get to, and all of those details a little bit later. But it's great to see you. Great to see you in London, and love the attire as always. As I mentioned there, you have been bullish on tech, your sector, pretty much throughout the period totally throughout the period since I've known you. Have there been any moments in the last decade or 9 years or whatever it's been at Wedbush when you've paused, as we talk about the sector as a whole, and you've thought we need to really reevaluate our long-term bull thesis on this, or has it been quite an easy call for you to stick to?
I mean, look, covering tech stocks since like late 90s, right? I mean, so like you could say perma bullish, but look, there have been dark moments, right? I mean, obviously going through dot-com bubble, financial crisis. But I think when I look back at the last few years, look, Liberation Day in terms of the tariff issue, that was a huge white knuckle moment. And that was something like, for me, that was like a gut check moment, because that was a fork in the road and it was going to go one way or another. And obviously, it
well,
went.
Let's just pause on that quickly, because I remember listening to our friends Dan Nathan at Risk Reversal podcast. You went on that like a day or two after the tariffs were announced, and you were really broken at the thought, not just about your calls on stocks, about what it could do to America as a whole. You just thought it was the wrong call.
That was more as a U.S. citizen than as an analyst. Because it's someone like myself that like goes to Asia 4 times a year, covered tech my whole career. I understood like those tariffs, what potentially that could do. That would have cut U.S. tech off at the knees. Went down to D.C. 4 or 5 times during that period, meeting with many politicians, trying to drill in like, look, I understand what you're trying to do here. This is not the right way to do it. And I think obviously it ended, much cooler heads prevailed, but that was a very like gut check moment. And look, for us, it's like you can call tech from the 25th floor of a New York City or London office building. You got to be feet on the street. And I think that's why, look, 3.5 million air miles the last 25 years, I've been able to do. I think that's been our advantage. And me and you knowing each other for a long time, I think there have been so many periods where it's very easy to fire in a crowded theater. It's really our work that we do that's given us confidence.
So in terms of the kind of more recent period of time, since Wedbush 2018, when you joined there, I mean, have you had to ignore valuation? Maybe ignore is too strong a word, but I guess one of your successes perhaps has come from not weighting valuation as highly as many other equity analysts.
Look, I'd say you can find AI in the spreadsheets. I think to some extent you have to, valuation's important, but my whole view is like if you focus just on valuation, you've missed every transformational growth stock the last 20 years. You have to be able to look out 3, 4, 5 years to really build a thesis to where you think that's going. And I think that has probably been, philosophically, like our view is that you got to focus on the tech and where ultimately sort of we'll call it a bull case scenario could go. But also it's doing the work yourself, CIOs in Asia, to make sure and validate where it's like, you know what, you can miss a quarter, stock could go against you. But as opposed to so many sell-siders, where it's kind of like they all head for the elevators, downgrade stock, it's kind of like steady hands when you have a sort of thesis.
So you said something really interesting there. You said, you can't spot these winners in a spreadsheet. Do you have to spot them in your gut? Do you have to think this is the winner of the next 5 years? Or is there something more tangible than just that? Or is that very important?
No, I think part of it is like I bet on leaders, right? Like, it's like, it's knowing Musk, back a decade ago. It's knowing Jensen, it's Lisa Su, it's Nadella, it's Carp. I mean, I think Palantir is a good example. Like knowing Carp, understanding Palantir, stocks like $10 or and I'm like, this is going to be a generational name. Now, people at that point, I mean, the hate mail was pretty insane.
You got hate mail from that?
From institutional investors. How could you bet on Palantir? This is one of the worst calls I've ever seen. But my view is like Palantir is going to change the world from an enterprise perspective. It was betting on the leaders, but also it's understanding the culture, the technology, and it's doing the work yourself. And I think that's something where I think that's probably been like, if I look back on our career from the Apple calls and Tesla and Nvidia and Microsoft and others, it's sometimes like going against the grain. Like, look, Nadella takes over Microsoft 2014. The view is like disaster. Like, how could you have an internal guy? But just knowing him and what he was going to do, I'm like, he's going to rip the carpet up.
I want to talk about individual stocks in a moment. Maybe we'll come back to this, but I think he's underpriced. He's perhaps the best CEO there is.
I mean, we're talking Hall of Famer. Like, he's really almost, to me, what he's done in Microsoft, it's for the history books. Especially understanding the red tape and what was at Microsoft before he took over. And he was an internal guy. He basically, he rapidly changed that company. And I'd argue we're not at AI. We're not in the AI revolution. Of course, Jensen, being the godfather of AI, if it's not for Nadella recognizing OpenAI back to early 2023 in terms of where it was heading.
Lots to get to in those specifics, which we'll dive into, but big picture to kind of question the bullishness overall on the theme. Back in my CNBC days, I left, 3 or 4 years ago, you always used to say, I don't think it's 1999, I think it's 1995, that we've still got quite a few years of the AI-related expansion before you might get into bubble territory. What I find really interesting watching and listening to all your commentary now, you've changed that slightly, but you say 1996. Yes. But we've had 4 years. So just, I guess, answer my skepticism there and that, you could look at it another way and say, since you said it was 1995, we're 3 or 4 years. Isn't that closer to 99 now?
Sure. And also I'd say like for someone like myself, like that went through the tech bubble as an analyst, saw it, 98, 99, 2000. What's happening here is that like, if you think about almost like dog years, right, in terms of as it's playing out, only 3% of US companies have gone down the AI path. So the reason I say it's a 96 moment, maybe I'm not calling like a 98 moment or 99, it's because only 3% of companies in the US have gone down. Europe, 0. Asia, ex-China, 0. Sovereigns are just starting to go in terms of Middle East and everything. And for the first time in 30 years, US is ahead of China when it comes to tech. And I think that's so important because it's Nvidia, it's the hyperscalers, it's the use cases. And we've said like this AI party started 9 p.m. It's now 10:30 p.m. Party goes to 4 a.m. Now again, in that party, DJ could stop playing music, glass on the dance floor, maybe cops come, try to break up the party. But the bears will watch that party from the outside through the windows. Bulls and bears meet up at 6 a.m. Bulls have a lot better night than the bears.
I haven't stayed up past 10 p.m. for a long time, I'm afraid. Breakfast shows will do that to you. But I love the analogy. Let's talk about some of those hyperscalers maybe first. Clearly, when it came to search, Google, winner takes all. If we talk about, and I know there's other levels to it, but the large language models, the way consumers are at the moment engaging with AI, is that going to be winner takes all? Who's in the lead at the moment? And do you worry, again, it might be one of the short-term pullbacks, about the value that has accreted across 4 or 5 of these companies with very little revenues to share between them?
Yeah, I think when you think about it from a hyperscaler perspective, so let's just even set it, less than 50% of workloads are in the cloud today. So it just shows you, we're not even talking AI, less than 50% in the cloud. When you think about AI, only call it, we talk about 3% that have gone across the US. When you look at these hyperscalers, they're still super early days. Now, Microsoft, it's their backyard. Like the enterprise, like this is their game to lose. Google, Amazon, you can say outside looking in, but now significantly closing the gap. $3 trillion that's going to be spent. That's a lot to go around for everyone. But remember, the hyperscalers, think about like a stack foundation of a house. That's the foundation. But the true winners too, they're going to be on the use cases, names like, Palantir, Snowflake, MongoDB, where does Oracle sit? Cybersecurity, infrastructure, CoreWeave, Nebius, others, power plays. Look, the reality is that for every dollar spent on an Nvidia chip, we estimate there's an $8 to $10 multiplier across the rest of the tech. So I don't think it's a winner take all. I think this is one where like you're gonna have a lot of the second, third, fourth derivatives, but that's why we believe at least 2 more years left in this tech bull market.
When we see new models come out, Gemini 3, this or that, how closely do you watch that? Do you think, oh, wow, they're now in the lead, I'm going to change my thinking? Or is it like, as long as all of them keep improving, then we're okay? I guess another way of putting that is, if OpenAI was listed on its own, forget the Microsoft partnership, would you be suddenly a little bit bearish relative to the gains the likes of Gemini are making?
Yeah, I mean, to me, like the whole reason we've been like pounding the table on Google is the view that Gemini was going to be special. And I think it's one, if you go back to earlier this year, the London cab drivers bearish on Google. But what they've shown is Gemini is real. It's a game changer, but I don't view it. Look, some of the parts you could argue it adds $56 a share to Google stock. But OpenAI, I still believe OpenAI went public today. It's $1 trillion market cap because of the
Legitimately.
And the reason is that it's not just about ChatGPT. It's about like the view that they're essentially going to build a full stack when it comes to AI. But I don't view it where Gemini comes to a huge, super negative for Altman and OpenAI. I view it as for this revolution to take hold, you need many models. You need models in China. Models are going to get cheaper and cheaper. The data continues to be, I think where a lot of that success is going to be.
What about on the other side of this massive bull run, Nvidia? Do they now, for the first time, have real genuine competition, whether it's Google chips, Broadcom, AMD?
Look, just getting back from Asia, there are 3 weeks. For 3 weeks, demand and supply is 12-1 for Nvidia chips. I mean, look, it's their world. Everyone else paying rent. Now, look, will there be a narrowing? Yeah, but look, they're 4 or 5 years ahead of any major competitor. Now, you look at like Google TPU, what's happened with Huawei, AMD, others are going to benefit. But that's also why Nvidia needs access to the China market. Given what I view as like, you don't give them access to China, it just makes China stronger, makes Huawei stronger, it makes domestic competition stronger. But there's one chip in the world fueling the AI revolution. It's led by the godfather of AI. He's wearing a black leather jacket. His name's Jensen.
He's badass.
Look, but the thing is, but it goes back to like, first of all, Jensen, 2021, 2022, getting crushed. Why are you investing in AI? You're a gaming company. And it goes back to like, those are the same, like if you go back historically, right, it's like 2008, iPhone is just going to be a 1-year AT&T smartphone. 2014, Nadella, why are you trying to turn Microsoft into a cloud player? 2013, 2014, Musk. Dude, there's no way electric vehicles are going to work. Look, it goes back to like, you bet on the innovators, you bet on the CEOs. And I think that's also very important, like in terms of how we pick stocks.
This podcast is sponsored by Interactive Brokers. Building wealth starts with the right broker. Interactive Brokers helps you reach your goals with powerful tools, global market access, low costs, and unmatched financial strength. That's why the best informed investors choose IBKR. Learn more at ibkr.com/master investor. I just want to pause on a couple of things with the stocks we mentioned so far, which is pick out Google, Microsoft, Nvidia, forward P. What are they on in your numbers? Because again, some of the moments when we've used to chat, like there was some pretty terrifying Ps. They're not that bad anymore. I mean, like Nvidia certainly has grown into its multiples. It's not a cheap multiple by typical metrics, but it's not that expensive, right?
And the street's underestimating true growth probably by about 25-30% in terms of where numbers are really going to go.
So what's your 12-month?
Look, the average tech company is trading at 27 times earnings. In the bubble, 30 times revenue. So when I look at Nvidia, 230 to 250 as I view as like base case.
In terms of what's that put it on what multiple?
And I mean, it could be like a high 20 multiple for basically a company that's the one chip fueling the AI revolution. And that's why it comes down to like the view like there's like a tech bubble. The best private companies haven't even gone public yet. These stocks, okay, are they expensive relative to historical? Yeah, but the growth is 4x. You have more growth over the next 3 years than you had in the last 10 years combined. So my view is just like, there's two types of people. It would be like 1950s going to Vegas. I tell you, okay, we're going to build the Strip, Vegas. This is the future. Then there could be someone else be like, it's desert. Like you're not going to have an airport here. You're not going to be able to do. So I'm just saying, like, I think that's really essentially like you have to believe, because my view is autonomous, humanoid robotics. Like that, those are some of the things that we see in the future.
So I want to just touch off on a couple more of ask you about a couple more of the bearish arguments that are out there, and one brings in Meta as an example, which is from a lot of the high profile, successful short hedge fund managers have been questioning in their accounts how long they're amortizing all of this AI investment over. and whether in fact it's artificially boosting their earnings, because not so much that they're not building the right products, but they have to buy the next best Nvidia chips much sooner than they're amortizing over. Is there truth to that? I.e., Nvidia's innovation is so great that everyone's going to have to spend the same amount again every 2 years, not every 4 years?
Again, we gotta see, I guess, it all plays out. I mean, but also like the mathematical gymnastics that a lot of the shorts have done, because maybe other, theses have not sort of panned out. I get it, but the reality is, like, for let's say like a Meta, Zuck's wartime CEO now. They have to aggressively spend, no choice, given how they're going to monetize their 3 billion users. When you start thinking about earnings and how that's going to, is it overstated and how it's all ultimately play out? I mean, well, in my view, like when you look out in the next 3-4 years, when we're looking at NASDAQ, 26,000, 28,000, like, I believe like in 2 more years left in this tech bull market at least. I just think a lot of that is short-sighted relative to the massive growth opportunities. And again, it goes back to like some of the shorts that you talk about. It's easy to be a short from the 25th floor of a New York City office building. When I want to see those shorts, if they're at fabs in Taiwan like we are, and they see demand 12x over supply, that to me continues to be the thesis.
Okay, one other bear case I've heard from someone who is plugged into this sort of stuff. I mean, it's funny how you mentioned the percentage of compute that's in the cloud, and there's still a long way to go there. What do you say to people who suggest that trend could turn? That as we start to use AI more and we share much more of our private data, that those people with deep pockets, businesses or wealthy individuals, will want to keep that data on site. And so the compute power instead will be at your home or in your office. And I guess linked to that is, have we overbuilt some of this data center capacity, which clearly is buying into the theme that everything is going to move to the cloud?
Look, there's more data centers under construction today than active data centers. I feel like the ship's left the station. Like, in other words, like that, it's all heading down that path. I'm not saying you can't have private clouds and others that are on premise for like, specific use cases. But I just think the reality is like, I think we're not going to have enough data centers. And there's like, I'm not of the belief that like you're going to overbuild data centers. It's a late 1990s, just like fiber and everything, and the overbuild with Aether and everything like that. I don't view it like that. I actually view it as, when you think about the future, 20% of cars being autonomous, humanoid robotics, consumer from a health perspective, pharmaceutical, you look at biotech, you look at government, how they're going to, I mean, it's just starting. It's not just about like Chat GPT. That's tip of the iceberg in terms of where it's all heading.
Brings me on to my next big stock that we haven't touched on yet, which is Apple. You've been, rightly, again, a long-term bull and even, including this year, pushed people to buy it when it had a dip. And it's bounced again, and obviously part of that's on the hope of iPhone sales. My question to you on that is, in this world of AI-empowered everything, is it fair to say that the actual smartphone handset is much less important compared to the AI software that will power all of our devices? And with that, does that worry you about Apple or not?
Yeah, and it's funny because like me and you, like so many times over the years, like Apple, like earnings is coming out and stock could be down. And it's very easy in those moments to be like, is it? But it's like, it all comes down to like 2.4 billion iOS devices, 1.5 billion iPhones. It's the biggest install base in the world from a consumer perspective. Services itself, over 100 billion a year. I think when you think about AI, that's going to be a huge monetization for Apple, but it all comes down to like what they've built, that ecosystem. What 99.3% always, once you're in Apple, you stay within the Apple ecosystem. So I view it as still so very important, but for Apple, they've been on the outside looking in. That's also why they're changing up a lot of their AI leadership. They're ultimately, I believe, with Google, Gemini, going to go head down that path in terms of exclusive partnership. They'll charge for models. Like you look out next year or two, they're gonna charge for models. That will essentially be like an Apple exclusive model. You're gonna have an AI app store. I mean, that's the future where it's heading for Apple. But it does still come down to, even though less important, it's about the install base.
Did Tim Cook take his eye off the ball with AI?
I think there's parts of Apple that have been run like a motor vehicle, like a municipality, red tape. Guess what? Google was there too. I mean, the beginning of AI, that was Google's problem. They've significantly changed that. But for Apple, innovation, not doing acquisitions, it has to go through a certain you could argue they had the wrong people in the wrong spots, which is why culturally they've had to rip the Band-Aid off, make a lot of changes. And I think Cook, and I still believe he'll be CEO through at least 2027, he's not going to hand the keys to whoever takes over Apple with an AI strategy blowing in the wind. Like, this will be a defined one between Google as the partner and leaders from the outside that could take this to the next level. And I think that's why they're doing everything right now ahead of what's going to be the big release next year.
I think we've touched on 6 of the Mag 7. So let's hit the last one, Tesla, and Elon in particular. Where do you rank him in terms of the great innovators alive today? And is his focus back on all of the little business interests that are captured by that one publicly listed stock, as opposed to whether it's politics or also, non-listed parts of his business empire?
Yeah. I'd probably put him as number one. I mean,
ahead of Jensen?
To me, the reason I put him ahead of Jensen is what Musk has done. See, I could argue like, we're not here if it's not for Musk. I mean, Jensen, and I think if you ask Jensen who he thinks the biggest innovator is, like, I mean, Musk is either one or up there top, because what we've seen in terms of the change in mobility, what we've seen in terms of changes, not just electric vehicles, but, really what's going to be the future in terms of autonomous and robotics. I think for Musk, it was a dark period during, when he was part of the Trump administration, Doge, not just brand issues, taking an eye off the ball. We talked about, sort of edicts that he needed to get back, the board needed to get him back. Because the reality is, like, the biggest asset for Tesla is Musk. Tesla is Musk, Musk is Tesla. But this is the most important chapter, I think, ever in Tesla's growth story, the autonomous and robotics future. And I think you're seeing a wartime CEO again. And that's why I think in the future, Tesla will be defined by what Musk does over the next 12 to 18 months.
A lot of pressure riding on some of those individuals, I guess. Just finally, in terms of what Jensen would say about great innovators, where do you think he would rank, or where do you rank the founder of TSMC, and how impressed are you? I mean, tell people a little bit about how important TSMC is, Taiwan Semiconductor, to all of these companies.
I mean, they're the fab. It's funny when you think about like Google with the TPU, like over the last few weeks, who makes that? TSMC. Like, TSMC is basically the hearts and lungs of the whole supply chain. It also speaks to, I think, a part where I think investors underappreciate how important they are. I mean, we have like in our ETF, the Ives out there. I mean, TSMC is obviously like one of the key players because they're basically a winner.
And you visited their fabs. They're unbelievably impressive.
Like, when you see what they've built, and obviously, they'll be building some stuff in the U.S. as well, in Arizona, and they're playing a different game than anyone else. And I think I won't call them monopolistic, but look, they've created something that is so rare, and I think for many years did not get the due respect that they should have.
Mm-hmm. Obviously, there's a bit of a political risk to that stock, but it's obviously a lot cheaper than a lot of US players.
Looking to that point, like when I speak at conferences, right, and there's always questions from the audience. It's like, well, what happens if China invades Taiwan? Well, it comes down to like, you could live your whole life in these sort of I'm not going to go in the ocean because there could be a wave. I'm not going to get in a car. The reality is like, is it a risk? Yeah. But I just believe that like the world even itself out. And I think China truly understands that they play 100-year sort of views and they're not going to do anything in the near term around Taiwan. And I think that's something where it's a risk, but I think it's a risk that like, it's a black swan risk that you have to take into, I think, your broader investment thesis.
I want to quickly touch on retail versus institutional. I know you're a big fan of retail investors. And I guess if we rerun the clock 10, 15 years, all of the very educated sell-side research only reached institutional investors. You know, that's been opened up for all sorts of reasons over the last decade. And now we've got AI too. And I guess my question on this is, firstly, how well informed do you think retail investors are now? Is it, in fact, better informed than institutional? But is the opportunity to do this research and come up with better analysis going to very quickly be arbitraged out if AI is involved on this as well? Because essentially, everybody could have at their fingertips, by asking the right questions to their computer, all the analysis that's taken hundreds of thousands of high-paid people to do in the past.
I think retail, I mean, like, look, doing this for so long, like retail up to like the last, like, let's say like, you know, right around like call it pre-COVID, they were like at the Thanksgiving, they were like at the kids' table playing checkers. Now, they have like an even hand as much as institutional. It's, you look at information flow, how it's evened out. You look at the sophistication of retail. You look at so many of these, you know, conferences, Future Proof, a lot of other stuff. I mean, like what I'm saying is like, this is around the world. I've been to ones in Asia. I mean, retail has a huge seat at the table. I think what that's done is that, like in April, they held stocks, institutional sold it. You look at names like Tesla, Robinhood, I think at times Nvidia, Palantir. Retail's been head of institutional. Now in AI, I don't view that it like changes like the arbitrage or whatever for retail. I mean, to some extent, you could go back to like last Fed meeting, you know, in terms of, you know, when you go back to, you know, in November, Powell, you know, not going to cut rates potentially in December, market freaks out. There's no, that's information. But if you have an understanding of like beltway politics, ultimately, you know, Hassett's going to get in there. And I think at one point it was like 20% chance that they're going to cut rates. You're like, I'll bet there's a better chance of me playing the NBA than them not cutting rates. And now it's 90%. Like, I'm just trying to explain, like, you go through these scenarios where there's a lot of arbitrage.
Mm-hmm, mm-hmm. People can move exactly very quickly on those points of view. Let's talk about the Ives ETF, the ticker being your surname, IVES. You launched this in July?
In June.
June. You just tell me it's nearly $1 billion.
Yeah, it's over $1 billion. Yeah.
It's over $1 billion. Yeah. Congrats, man.
No, thanks.
That's awesome.
And look, I didn't, like, you know, I had a lot of confidence in the thesis, but you don't.
Just sell, what is the thesis? So this is 30 high conviction AI names.
Yeah. So like, look, a lot of people, like people that follow me from around the world, like they know the way that I pick stocks. And it was basically like me picking like the 30, like the Ives AI 30 winners in different subcategories: chips, software, cybersecurity, you know, infrastructure, and, you know, and power and some other derivative areas. But 4 times a year, it's like, okay, there's some we could swap out, some we could swap in. But it was giving investors, whether in the UK or New Orleans, whether institutional Australia or retail in Hawaii, a way to bet on the AI arms race. Now, again, when you do that, like, you don't know what reception's going to be. And obviously it's been like, super successful, and I'm humbled. But at the end of the day, like, I'm focused on just like giving investors the ability to make money.
And in terms of the kind of valuation levels, I mean, do you have a blended P of what this is? I guess my point is, I imagine it's quite, if you're looking at traditional metrics, an expensive multiple.
Totally.
And would it be fair to say you think it's kind of fairly high beta? If the market cracks, it's going to fall quite a lot, but you think
like,
long term it's...
When market sells off, like the risk off days, it definitely sells off more in the market. I think so far it's obviously the performance significantly like outperformed NASDAQ. I think part of the view is just like I'm betting on the specific winner. But it's also, it's also the derivative beneficiary. It's not just betting on big tech. Who are the second, third, fourth derivatives in AI? And I think that's very important.
And I wanted to pick some of those out. So you shared all 30, and I've picked 3. We just want a quick minute on each. That I have to admit, well, actually one of them I'd heard of, but 2 of them I hadn't, but they were smaller ones I thought we should touch on. So what is Iren?
So that's basically when it comes to, you think about energy, they're going to be like an energy player to fuel data centers. They also play in crypto mining, but that's something where like the biggest constraint in the US is going to be power. Oklo, G Vernova, Iren's on there. And I view them as kind of like let's call them diamond in the rough, but there's someone that's going to play a bigger and bigger role in terms of data center build-outs.
What's Pegasystems?
So that's an IT tools company. It's not like, necessarily like the highest growth company, but as companies build out their use cases, Pega plays a huge role in terms of a lot of these build-outs.
And finally, CoreWeave?
I mean, a neo cloud, just like Nebius, but that's one where, as this sort of infrastructure builds, where you think about the stack, they play a huge role in terms of this AI build out.
A reminder to our listeners that nothing in the podcast should be considered direct financial advice. And of course, Dan has positions in all of those stocks. Let's talk, Dan, about the other tangential business that you've done in the last year. Again, kudos and congratulations on it, because it's been very successful. You listed it on the NASDAQ just a few recently.
Yeah, so that was in September.
We're talking about Orbs.
Yep, Orbs.
ORBS. What exactly is it?
So, ACO is the name of the company, Orbs ticker. And this is, it started off as it's basically a treasury company that invests in WorldCoin. We partnered with Sam Altman, who is really the originator of this. The whole goal is that authentication in the future is not just going to be password. It's not just going to be traditional. You're going to need human proof authentication. Orbs is basically iris scanning technology. These are actually orbs. They're actually physical devices where you do iris scanning technology. There's almost 18 million on there. The big view is basically betting that we're going to be an enterprise play on human proof authentication.
So this is, again, just to go back a basic step, this is a crypto play, it's a blockchain play, but specifically on using that technology to make the best way to authenticate who people are going forward.
Human proof authentication.
And this will be used across, you think, all of our tech, or specifically in the financial services of...
I believe as the trillions of dollars being spent in terms of, data center, GPUs, you're going to need human proof authentication. What we're doing at Orbs, it's building that all out. I mean, obviously World has been foundational. I think they're years ahead of any competitor. And it started off as it's a treasury company. I mean, that's how, Bitminer and some others, that's obviously been a big focus of investors. But we're different. We're really more of an AI tech company, sort of meets crypto. And, I view it as just early days in terms of this build out.
And obviously, to be clear again, clearly Dan has an interest in this company.
As chairman, yeah.
And as chairman. And I refer people back to our episodes with Dan Moorhead and our crypto episodes with Tom Lee and Kathy Wood if you want to hear more about crypto treasury companies, specifically whilst we're on that, and crypto more broadly, Dan. Clearly, we've had a big pullback of late in all cryptocurrencies, Bitcoin, Ethereum in particular. One of the plus points, if we step back for most of the 12 months before that pullback, was some of these digital asset treasury companies. and the way in which they were kind of legitimizing the whole move.
Saylor and MicroStrategy.
We had Tom Leon,
BitMiner,
and obviously we've had Dan Moorhead on as well. Is it fair to say, very simply, that then as prices start falling, these treasury companies are forcing the price down more? We don't even have to suggest it's leverage or anything's odd going on, but you had a guaranteed buyer becoming a guaranteed seller.
No, I think there's no doubt like that's added to it. I also think there's a broader deleveraging that's happened, across the board. But I think with the treasury companies, the big thing, whether it's MNAV or however these stocks trade, I think the thing is that more and more investors are trying to discriminate to be like, okay, like who is a real business? What are the management teams? Look, it's no different than when you think about like tech. You could have 10 companies in a space. Maybe there's 2 winners. So I think you're starting to see a winners sort of play out in this scenario. But the reality is when it comes to crypto, and we've talked about it, like it's a consolidation, it's been a deleveraging, but it's not a crypto winner. It's not the end of this bull market in crypto.
Is there a day when Bitcoin, if we use that as a focus example, no longer has 50% drawdowns?
I do. I mean, I was in, I met with a bunch of senators, Congress, along with Mike Saylor and Tom Lee and a few others, trying to focus on like the Bitcoin reserve, met with Ted Cruz and some other senators. I think what you're going to start to see, whether it's Bitcoin reserve in terms of, in the US government, you're seeing much more legitimization. Crypto was almost a 4-letter word, in the last administration. I think that was part of it, right? So now you're seeing obviously a lot of deregulation. You're seeing, obviously an SEC that's very pro-crypto. But I think you're going to see less volatility as it plays out over the coming years. That's sort of our view.
Certainly the administration's tone has been a massive shift. Dan, as we wrap up, a couple of questions about you. You're not your classic Wall Street guy, in terms of mainly your style and the way you approach life, but your clothes is a great example of it. Were the clothes always embraced and your style always embraced as they are now? As in, did you have tough years where you had to fight against the grain?
Oh my, of course. I mean, yeah. I mean, there's like there are years like 2022, like when tech stocks are getting crushed. I mean, hundreds of messages like every day, like clown still wearing the green sports jacket, you clown this. Like the reality is that you have to have thick skin if you are, I think, a little different, like dress differently. And and you've known me for years. Like I don't take it personally. I just view it as kind of like, this is my style. It's what I'm comfortable wearing. We obviously have a clothing line around it as well. And also, I think it's sending a signal to like a lot of people out there where like when things are tough, you don't like hide and be comfortable in your own skin.
Well, I've always adored the way you're unapologetically yourself. And to your unbelievable credit, you've brought a lot of people around with you, which is no easy feat to change the kind of sentiment of the herd. As you said, danivesclothing.com. I didn't even know that existed until researching this latest.
And that's where the collab with Snowmelt, which is a Brooklyn designer.
Do you do clothes in giant size like me?
We do all. So I mean, like what's like this is custom. But I need some. Look, but it's also one where there's a lot of men, and we do women's clothes, obviously. But there's a lot of men around the world, they'll be like, I want to dress more color. I want to do this. The whole reason I did the clothing line, it's actually just to get more color out there for people to be like, hey, I don't want to go extreme to maybe Dan Ives level, but like maybe I want to take a little step into the color zone.
Well, we need to get some Master Investor swag done, so maybe we can talk about that.
Dude, for the next podcast, we're doing it.
Let's do it. Just finally, the same question I finished with everyone on, which is, obviously a lot of wannabe master investors listening, trying to train and improve themselves. What is your overriding piece of investment advice for our listeners?
I think you have to have, like, understand your risk profile, build out your investment profile and stick to it. In other words, you cannot let the macro, the nervousness, the social media, the haters get you off. You got to stick to that. And I think that's very important, especially in nervous times. Have your thesis, have your winners, have your process, but don't let the nervous periods get you off your process.
Dan, it's been a pleasure as always. I've enjoyed catching up.
This has been great. I've been looking forward to this, and thanks for having me.
Dan Ives of Wedbush Securities with us, and of course the Ives ETF and Orbs as well. Thanks for tuning in to the Master Investor Podcast, and our thanks again to Dan Ives.
Thanks for having me.
The Master Investor Podcast is sponsored by Interactive Brokers. Please do remember the views expressed in this podcast are for general informational purposes only. Nothing in the podcast constitutes a financial promotion, investment advice, or a personal recommendation. More on that in the show notes. This podcast is produced by Paradigm Productions and Master Investor Ltd in association with Birdlime Media. If you've enjoyed the show, please do subscribe on YouTube or click follow on your podcast platform, and you'll be automatically notified each time a new episode drops.